morning. Let's go over today's trade plan. So in the overnight session, we saw that ES simply balanced within yesterday's range. And at this point, heading into the open, we know that overall, the buy side is in control, but ES is trading at important resistance here at the 91 quarter to 94 quarter. And it's still an area where it can be a spot for rejection or failure. So heading into the open, our short-term bias is actually going to be neutral, because there is potential for sellers to still defend the 91 quarter to 94 quarter, and in the event that ES fails there, we could see a pullback into yesterday's low, into 82.5 to 84.5, and then if that area starts breaking, we can go down and fill the gap at the 75 to 77.5 zone. Now on the downside, initial support is a spot where responsive buyers can be active, but it depends on how the market approaches that zone. So what I mean by that is if ES continues to balance above yesterday's low and now it finally breaks down after several hours of continued balancing on the day time frame, then 75 to 77.5 may not be the ideal spot to initiate another long. In that case, 69 quarter to 71.75 would be a higher probability area. But let's say ES goes straight down into 75 to 77.5 so that it's short-term exhausted by the time it reaches that zone. In that event, initial support can hold and it can be a reversal point. So 75 to 77.5 is an area where buyers can defend, they can be active, but we do have to see how the market actually approaches that zone. The 69 quarter 71.75 is just a better zone overall. It's just a stronger area of support, and for those reasons, there's a higher odds of a bounce off 69 quarter to 71.75. On the upside, a breakout above 91 quarter to 94 quarter would confirm the buy side in firm control, even on the smaller time frames, and that's why we'll have to be cautious at 97 quarter to 98.75. That's not really a strong area of resistance, and if we're breaking out above the 91 quarter, 94 quarter zone on strong momentum with the other markets participating, then we may not get much of a response at the 97 quarter, 98.75, so we'll have to be careful there. And the next major area of resistance is 2103 quarter to 2105 quarter, which marks the all-time high. And that again is still a spot where responsive sellers can be active. And then beyond that, there is no hard resistance. At that point, you are making fresh all-time highs. Now, given that the other markets are still playing catch-up, I think that if the other markets with Nasdaq and TF, if they are hitting their own respective areas of resistance, so pull up a daily chart for Nasdaq and TF and just look at the recent major swing highs in those markets. So in the event that NQ and TF are tagging their recent swing highs and ES is tagging 2103 quarter to 2105 quarter, then we could get some rejection there as well, and we may not really make too much headway beyond the all-time high today. So again, going into the open, the short-term bias is neutral. We are open to the idea of a potential failure at 91 quarter to 94 quarter. It is still a valid area of resistance. It hasn't been taken out yet, and until it's taken out, it can continue to act as resistance. And in order to take it out in any meaningful way, we are going to have to see broad market strength, sustained upside momentum, and the other markets participating in the move as well to really sustain a move above 94 quarter. Otherwise, that can be a risky area for buyers to step in. So those were the main thoughts. Let's see how the market responds to the initial resistance zone. That is really going to set the tone for the day. Bigger picture bias is going to be bullish, but short term, we can quite easily get a pullback to 75 to 77.5 and even 69 quarter to 71.75, where buyers can start stepping back in. So beyond 69 quarter to 71.75, the risk reward is not really going to be on the short side, and the market can reverse from that point on. So those are our main ideas. Let's see how the market responds to initial resistance, and we'll take it from there.